Good evening. This is the Elliott wave update for the S&P 500 for Wednesday, April 6th, 2022. We're just going to be updating two of our scenarios that are running in tandem with one another, so parallel. But as I can say, we are, I believe, getting close to the point where one will become, take over the preferred or remain the preferred, because the first one is still the preferred view, and the second one would actually be put on hold until the first or the preferred view plays out. So again, starting here on the daily chart, we continue to have our highs at 4,808, and then this low is continuing to be marked as intermediate wave one, the completion point, and we're still within an intermediate wave two corrective bounce. Now within that, we've gotten the minor wave A of two, and then we're still within that minor wave B of two, and then the internal could be finished. So in other words, within that minor wave B of two, we have the minute wave A, the minute wave B, and we're in still that minute C wave. Now, we got close to actually that would be, gotta take it down to the hourly. Can't pull up the level. I believe it's 44.44, but that actually is today's low. So we got close to 44.28, which is where we had that layer of overlap between wave C and then that larger minor B wave. The larger minor B wave had support at Fibonacci support of 38.2, and that was also there right at 44.28. And then the C wave had support, and that was 1.236 support at 44.28. So the market initially kind of dropped down and basically kind of held 44.56, 44.55, but when it broke, it slid nicely. And at first it was holding it, and then we got that Fed news and it zipped below and then rallied back up. So this actually could, but I don't believe it, it will have put in the completion point. And the only possible way I could try to count that, and let me see if I can open this up even so, would be that within this B wave, 1, 2, 3, 4, and this all turns into the 5. So in that case, then the minor wave B of intermediate 2 could be considered complete here. But I believe that this counts better as 1, 2, and then 1, 2, 3, 4, and then a 4 and a 5 down to here. And this is a wave 3 of C, wave 4 of C, and then we get that fifth wave. Two reasons why. We did get that very nice launch off of that low. I'll give you that. And that was right at that 2 o'clock hour when the Fed minutes came out. And once again, told us what we already knew, had already been reported. But for some reason, they do this now, both meetings, they've done this at the last. They decided to just push the buy button, and they just started to push that buy button as if this was going to be saving news. It's like, it's not telling us anything we don't already know. So I've always found that a little interesting. In any case, we rallied very nicely and then dropped back almost 62% of what that rally consisted of. And now we're basically hanging out right around unchanged, waiting for the next direction to take hold. So what we need to do, we need to continue to leave open the potential for a continued drop down to this 4,428 level, which again has that overlap of where the larger minor wave B of intermediate 2 can complete, and that C wave coming off could be just extending a little bit lower, and that would come in at 1.236. That all works. Below that, we continue to have additional support. If the if the decline just really picks up steam again, as it did today, and starts to plow through this. So besides 44.28, we have 44.07, 43.77, come on. And then we have our next overlap at 43.66. Now that is the 50% for that minor B wave and the 1.70 level for the C wave. So it is below here that scenario 2 would gain a lot of ground, that this would then start to become a little bit too big and too forceful. And remember, scenario 2 suggests that this, which is marked minor wave A, would be the completion point for intermediate wave 2. Then we have wave 1 of 3, wave 2 of 3, and we're dropping in a 3 of 3 move, of which this first 5 down, in my opinion, would only be wave 1 of 3 of 3, because of the enormous size that I'm looking for within this third wave. The power of this third wave, I think, will display itself quite nicely, if indeed this is what is at hand right now. Now, a lot of talk today. We continue to see the bond market to just really continue to drop. And now they're hanging around their closing level. The 30 years hanging around. But the 2-year note, the 10-year note both made new lows today, but then flipped and rallied. So they found that support and they rallied right off of it. And which was, could have just been, this is just the bounce, this is just the relief, this is just the, everybody steps in and covers some of those immediate shorts, et cetera, et cetera. Very well could be. I do not think it's over. I do not think interest rates are done. They are just beginning. And that, I think, is the message that's finally being picked up by the market. So we can possibly still be in a very serious downtrend. And if that's the case, we're looking for this to all to start to break down. Now I'm going to go back out to the daily chart so that I can show this more cleanly, that if this is the end of intermediate wave 2 and we're in this intermediate third wave, I definitely am looking for it to break below 41.01 and to likely get us down. And this would not be the correct 1.618, but definitely get us down and be breaking 976, 898, or 9,000. Excuse me, 3,900, and then 3773. And as it heads down to 3,600, 3,500 into that area before this intermediate wave 3 would be done. In fact, I will take that off and let's take a look. Let me just kind of make this a little bit bigger. It's going to make it easier to get our points. I'm going to put that there. Put that there. Excuse me. There was something right with my computer. One more time. There. To there. To there. Okay. So again, not perfect, but we got to move on. 1.618 of all of this. This has got to come. So now it's cleaner. 618, we'd be looking for intermediate wave 3 to bring us down to 34.85. Minimum 39.23. Minimum. And that's just where intermediate 3 would be equal to intermediate wave 1. And I don't ever really look for that, because wave 3 is normally the longest and the strongest. And that would suggest that we drop all the way back down. That would be scenario 2. If scenario 2 is in force, then that's what I'd be looking for. So, okay, so we have our scenarios. The preferred view remains the same, and that we are getting ready to complete a minor B wave within an ongoing intermediate wave 2 corrective bounce up. Once it's done, then I'm looking for that intermediate third wave. So we need to continue to allow for the market to drop back down a little bit lower, complete the C wave, begin to do its rally, get itself above 46.31, and then we're definitely be looking for it to hold below 48.08. But I would be able to give some indications of upside, and we would be looking for it to go above 4,700, and maybe, but hold below 48 at this stage. If it should start and we're in progress, then scenario number 3, which has always been there, but doesn't run congruently with the other 2, would jump into play. And should it begin and should it happen, then I'll reintroduce scenario 3 to show where the market could go. But right now, let's look for the bottom of this minor B wave, the start of the minor C wave up. Remember, I've been talking about this. This is kind of important, that once the market has figured that it's got us all into the go short, go short, go short, we put in all these short positions, just about when it'll turn and it'll rally and rally big. That's going to be the kickoff. If it turns and it rallies and it just isn't stopping, they're just coming in and pushing, similar to what they did do today, but it lacked follow through. They got to a certain point, stopped on a dime, and they brought it back down. So I would be looking for it to be announced and not be brought back down, that it finishes. Now, it could have been because of the time of day, we were too close to the close, but I would be looking for those buyers to come back in, actually after market and now, and they're not. Okay, so I'm going to leave it right there. Our next update will be on Thursday, April the 7th.